My oh my, yesterday was a red day. Should I buy or should I just sell it all? Personally, I'm gonna hold the line. I'm gonna buy more at this discounted price. Hi, what's going on, friends? This is Gary, and in this video we're going to talk about Clover. In particular, we are going to talk about the chart, the data, and Twitter posts by S3 company. So without further ado, let's take a look at the chart. Yesterday, we were down by negative 7.43%. It was a hit to our morale, and right now we closed at $12.33, post-market $12.27. And if you take a look at this 4-hour chart, we can tell a very big picture, and that is right now we are consolidating at this price range. I like consolidation after a big spike because it means that a lot of investors are lurking around waiting to buy, and if the price don't drop too drastically, I think it gives investors confidence to jump in once the consolidation phase has finished. And the good part of it is that, as you can see, this 50-day moving average crosses the 200-day moving average, forming the golden cross. Therefore, the price spiked. Probably a lot of day traders start to jump in and make quick bucks. But also, the good part of it is right now we are touching this 50-day moving average, meaning over here it was overly extended. I mean, we all can tell that it is overly extended, and it dropped back down. And we are at this earth place, right? We are touching this 50-day moving average, and I foresee it bouncing back up. I hope it does, touching this support line before we go back up, which is a good sign anyway. So if you take a look at this 30 minutes chart, previously we mentioned that yes, in this 30-minute chart we can tell that there is a death cross forming, but right now it is consolidating again, and therefore the 50-day moving average inching closer towards the 200-day moving average. If we have green day, a couple of green days, then we might see a golden cross, and that's when the day traders start to jump in again, and hopefully the momentum continues. That is about it for the chart, but let's take a look at some of the volume of the chart. Okay, let's take a look at the volume for the chart. So as you can see from the volume alone, it shows that there was a huge volume over here, but as the day gone by, the volume has decreased quite substantially. So one of a good friend on Reddit community, right, posted this, which I'm gonna make it easier for everybody to see. So as you can see over here, this is the volume chart, and on the 4th of June, when it was at $9, closed at $9, the volume was 16 million. Okay, when it spiked up to $28, the volume is 371 million. And right now, our volume is one of the lowest volume ever since the previous low at 16 million. So if you take a look at the past trend, maybe you can tell that, as the volume decreases, therefore, let's hope, Monday, Tuesday, we might see this particular trend again. So that's for the volume, okay? Now, let's take a look at the data, okay? Let's take a look at Ortex data, and in particular, let's focus on the estimated short interest percentage of free float. And right now, we down by negative 4.92%. I'm not sure how. I mean, as you can tell from the borrow share and return shares, it has decreased, probably because of the day traders seeing the particular support line being broken, and a lot of them panic, they sell. It's okay, because at 36.53% of SI, it is considerably high. It's considered quite high. So I'm not afraid of this, but more importantly, I like to bring your attention to the cost to borrow, an average of 114%. That is insane. To put things into perspective, if you short a stock, the maximum that you're gonna earn is 100%. That is if the company goes bankrupt. The maximum one gonna earn is 100%. The fact that right now the cost to borrow is 114%, meaning if we manage to hold for an entire year, which I don't think they will, hold for, the short sellers can diamond hand for one entire year. If we hold for one entire year, they will lose 114% of whatever they short. So I mean, that's with the assumption that this 114% remains the same. But every single day, if the cost to borrow is high, then they will definitely panic. So with that, let's take a look at more data, which is the iBorrow desk. It gives slightly different results, probably because they take the data from different brokers. So Clover Health Investment Corp. So as you can see right now, the iBorrow desk, the fee is 87.2% lower, probably from different brokerage, and the available share is 100,000 shares to short. Now, as you can see, over the past few days, it has been 100, 50, 18, 100 plus, and right now we are at 87.2. For those of you who are not very sure, basically, is it considered high? Let's take a look at this website called Finance Trend, and it says the typical fee for a stock loan is 0.3% off per annum. 0.3% per annum in case short supply. When many investors are going short, the fee may go up to 20 to 30%. Even though the stock is borrowed, investor dividends still belong. Okay, so if many investors are going short on the stock, the fee may go up to 20 to 30%. And right now, we are seeing 87%, and on Alltex is 114%. So we are being shorted at a large scale. Okay, now I hope you guys understand what it means. We are being shorted heavily. So now let's take a look at this MaximumPain.com, and as you can see here, the maximum pain is $13. Right now the stock price is $12.29, meaning we are below the maximum pain. Good job for the market makers, short sellers, for pushing the price down. I mean, whatever, right? Why? Because the open interest, as you can see, for $40 call is so high, and $13 call is pretty high as well. And of course, you take a look at the volume. $13 call has the highest volume, and if they keep, I foresee them pushing the price below $12 because still got calls at $12, so they want to push below $12 so that only this group of people will be in the money. So that's what they want to do. But regardless, we talk about the chart, we talk about the data, we know that the possibility of short squeeze or gamma squeeze is there, so we stick to the plan. Now I'd like to share with you guys another thing, which is tweet from this S3 director. This person, basically, he's a managing director of predictive analytics, S3 Partners, this company. And he posted, here are a few of our top crowded and squeeze call, and apparently Clover ranked number 100%. So this 100% squeeze call, I think it is not in according to first, second, third, but rather as long as there is 100%, I think they are ranked 1, and then AMC ranked 2nd, BBBY and NKLA would be 3rd. So just to share with you, Alltex and all these companies have been posting a lot on AMC and AMC squeeze. All right. And now all these companies start to post on Clover. So surely they see something that a lot of people don't. So if you are bullish on Clover, stick to the plan. We have been discussing all the data. We know that the potential of squeeze is there, the risk to reward ratio is there, and furthermore, as what I said in the previous video, I said that even if there isn't a squeeze, the potential of the company expanding is high. I mean, in fact, recently it has expanded, so the potential of the company going 20 plus is there. So with that, I thank you guys for watching thus far. I hope you guys like it. And as usual, this is not financial advice. This is just me. doing my research. I like the stock. I've been talking about it. If you guys take a look at my Clover playlist, I've been talking about Clover since the Reddit community was only 9,000 members. So I'm glad to see that it's growing. Yeah, that's about it. I'll see you guys in the next video. Goodbye.